In a surprising twist, the Japanese yen is defying expectations and making a comeback, but is it a fleeting victory or a sign of deeper economic shifts? After 3 days of losses, the Japanese yen, JPY, staged a rebound against the US dollar, USD, on Wednesday, fueled by the release of Japan's merchandise trade balance data. While the country still posted a trade deficit of 234.6 billion yen in September, it marked a slight improvement from August's revised figure of 242.8 billion yen. However, this fell short of market hopes for a surplus of 22.0 billion yen. And this is the part most people miss. Despite the deficit, the yen's strength suggests investors are focusing on other factors, like the potential for a shift in Japan's economic policies under its new leadership. Japan's exports saw their first year-on-year increase since April, rising 4.2%, though slightly below expectations. Imports, on the other hand, surged 3.3%, reaching an 8-month high and exceeding forecasts. This mixed trade picture comes at a pivotal moment for Japan, as the country welcomes its first female Prime Minister, Sanae Takaichi. Takaichi's election has sparked both hope and uncertainty. While she promises to bolster the economy and defense, her dovish stance and coalition government raise questions about future monetary policy. But here's where it gets controversial. Could Takaichi's leadership mark a turning point for the yen, potentially reversing its long-standing weakness against the dollar? Meanwhile, the US dollar is facing its own challenges. The prolonged federal government shutdown, now in its 4th week, is casting a shadow over the currency. The Senate's repeated failure to pass a funding bill has led to the 3rd longest funding lapse in modern history, raising concerns about delayed economic data releases and increased market uncertainty. The US dollar index, DXY, is feeling the pressure, edging lower after recent gains. A thought-provoking question: is the shutdown revealing a deeper vulnerability in the US economy, and could this be the catalyst for a significant shift in global currency dynamics? The US dollar to Japanese yen pair, a key indicator of this shifting landscape, is currently trading around 151.70, reflecting the yen's recent gains. Technical analysis suggests a persistent bullish bias for the pair, with resistance at the October 10th high of 153.27. A break above this level could pave the way for further gains, while support is found at the 9-day exponential moving average, EMA, of 151.20. For those following the markets closely, the question remains: will the yen's resurgence continue, or will the dollar regain its dominance as the shutdown saga unfolds? The Japanese yen's strength today is evident in its performance against other major currencies. As shown in the table below, the yen gained against the US dollar, euro, British pound, and several other currencies, highlighting its safe haven appeal amidst global economic uncertainty. Insert updated currency table here. The heat map further illustrates the yen's relative strength, with its value appreciating against most major currencies. This is particularly noteworthy given the yen's historical role as a safe haven asset. During times of market stress, investors often flock to the yen, seeking its perceived stability and reliability. However, a counterpoint to consider: with Japan's new leadership and potential policy shifts, could the yen's safe haven status be reevaluated, and what implications would this have for global markets? The Bank of Japan's, BOJ, policies play a crucial role in shaping the yen's value. Historically, the BOJ's ultra-loose monetary policy, in place from 2013 to 2024, led to the yen's depreciation against major currencies due to widening policy divergence with other central banks. However, the BOJ's recent decision to gradually unwind this policy has provided some support to the yen. A bold interpretation: is the BOJ's shift a strategic move to strengthen the yen, or a response to changing global economic conditions? Over the past decade, the BOJ's commitment to ultra-loose policy created a significant gap between Japanese and U.S. bond yields, favoring the U.S. dollar. Now, with the BOJ's policy shift and interest rate cuts by other central banks, this differential is narrowing. This raises a critical question for investors: will the yen continue to benefit from this convergence, or are there other factors at play that could influence its trajectory? As the global economic landscape evolves, the Japanese yen's resurgence invites both optimism and caution. While its recent gains are noteworthy, the currency's future remains intertwined with Japan's domestic policies, global market sentiment, and the actions of other central banks. We want to hear from you. Do you think the yen's strength is sustainable, or is it a temporary phenomenon? Share your thoughts and predictions in the comments below, and let's engage in a thoughtful discussion about the future of this major currency.